As we head into the final weeks of the year, these are the major news that are going to drive the market. On Monday, the 11th of December, we are starting with a major news on the Australian dollar. It's going to be a deciding factor for the AUD if we are going to go up or down. Then on Tuesday, we have the Great Britain pounds major news on climate count change. And then we have the CPI news, which is one of the biggest news that drives the price of the United States dollar. Then on Wednesday, we also have the FOMC statement, which is also a huge news for the United States dollar. So it's going to help us determine if price is going to keep pushing higher or we are going to go back to the downside. And Thursday, we have the unemployment change for the Australian dollar. And then we have the Great Britain pounds monetary policy and bank rate votes. Then we also have the major news on the euro, which is the monetary policy statement, a huge driver for the euro. And then on Friday, we also have a major news on euro, GBP, and the USD. All right, so it's going to be a huge week. It's going to be a volatile week. So now that we've seen what is happening next week fundamentally, let's look at technicals. This week I'll be starting with JPY index. JPY index, if you watch last video, we closed last week with this huge bullish engulfing candle, and I called your attention to the fact that for this month I'll be expecting a bullish JPY, right? If you didn't watch that video, go watch that video. I even made a shot on this just yesterday, so this is the link to the shot also at the top of your screen right here. So I knew that price was going to push to the upside when I saw how weak we closed for last month. This is the monthly time frame, so each of these candlesticks represents 1 month of price action. So I spotted that we closed November with this dodgy candle, which signifies indecision. So sellers are taking profit, buyers are beginning to creep into the markets. There was like a tug of war for the month of November, so price ended up closing with long wicks on both sides of this candlestick and a tiny body, right? That signifies a huge tug of war. And now so far for the month, like I rightly predicted, you can see how bullish we've been so far. Now on the weekly time frame, this was what we looked like 2 weeks ago, and then this is last week's candle. Huge move to the upside here. I was actually looking at 78.1 area. Price actually blasted through that before giving this massive rejection. So are we going to continue downward or we are going to continue upward? Let's see that on the daily time frame. The next couple of days is going to let us know if we're going to continue higher or we are coming back down. Now that we're on the daily time frame, one glance at this, I'm expecting price to continue higher, with my next target being 796.0. I'll take that again, 796.0. That is my next target. But before we make it all the way to the top here, for the first couple of days, maybe Monday and Tuesday, I don't know, price may most likely pull back into this region. Let me bring this region into play here. All right, so price may most likely pull back into here, which is around the 768.3 area, before we now make our way up to 796.0 area. And again, price may just pull back from inside this zone to this area here. So because, why do I know this? Price has clearly made a new higher high, not just one higher high, series of higher highs. We broke above this level, we broke above this level, and we broke above this level, right? Price is now trading above this huge trend line. This is a daily trend line, massive trend line. Price has been below this trend line for a long time, and now we are way above that trend line. So if we want to go by the rule of trend lines, price will inevitably come to this zone here, but that will take us months and months before price gets into that area. So let's take it one step at a time. Let's look at 796.0 as our next target. Then if we go to the 4-hour time frame, on the 4-hour time frame, let me just delete this and this. So just like I explained on the daily time frame, so it's either we pull back from we continue bullish from this area to this area. This area being 774.8. I mentioned this in the daily time frame, so you can just rewind a bit to spot that zone. Or if we break below this area, then this is the area I'll be expecting that pullback to come into. All right, because this area below has also been tested multiple times historically, right? So price may come into that area before we continue higher. I don't trade the JPY index, so we just use this to gauge how the JPY is going to behave going forward, right? So this is what I am expecting on JPY index going into the next few weeks of the month. All right, I am bullish on JPY index this month. So now that we've seen what is happening on the JPY index, let's quickly take a look at what is going on USD JPY. So if you watched last week's video, let me limit this to the lower time frame. If you watch last week's video, we closed with this massive bearish candle, and I was expecting another bearish week for the USD JPY, and price actually gave us a bearish week. You can tell by this red weekly candle here. Now let's go to the daily time frame. On the daily time frame, this was last 2 Fridays candlestick when I did the analysis, right? So I said I would be expecting for price to continue lower to at least 114.956, and if we break below that, then we'll be coming into 142.241, right? And that's exactly what price did. Now let's go to the 4-hour time frame where we can see things more clearly. That last week price was trading around this region here, right? And I was like, okay, if price breaks below that zone, gives it a retest, then we'll be coming down, right? And then I gave another option on the 15 minutes time frame. Let's quickly take a look at the 15 minutes time frame. So on the 15 minutes time frame, price was trading above this region, and I was like, okay, I'll be expecting 2 things. If price breaks below there, pulls back and gives us a good entry, then that will be a good place to sell from. All right, but price broke out, gave a retest, didn't really give a good entry, because there are specific things I consider a good entry, which obviously I can't find here. So if I was trading this, because I'm focused on Euro USD alone for now, but if I was trading USD JPY, I wouldn't have traded this. I wouldn't have gotten an entry here. All right, that is why you need to have a specific entry rule before jumping into a trade. When you have a specific entry rule that has proven to be profitable over time, only then should you execute a trade. You could also go on and lose that trade. I mean, you can't control that, right? You can't control that, but at least you want to give yourself that advantage. And for you to know if your strategy is profitable, then I believe you must have back tested it, which is very important to gain confidence and to also gauge how well that particular strategy has performed historically, so that you can now implement that in a live market going forward. So I also give another entry opportunity that I'll be expecting for price to pull back into this zone here before we drop bets. Now price didn't come into that zone before the huge drop. Price just ranged and ranged and ranged before boom, falling down. It didn't really come into that zone like I wanted to see. Or it actually did. It actually did, because I remember in last week's video I drew this Fibonacci retracement level, right? It was at this point, price was trading at this point when I drew it. But when you saw price bouncing back up, then it's advisable you refine your Fibonacci retracement level, because I was looking at the 0.5 Fib level to sell from, the 0.5 and the 0.6 Fibonacci retracement level to sell from. So price actually made its way to the 0.5 Fibonacci retracement level. So if you had sold at that 0.5 Fibonacci retracement level and put your stop loss above the 0.6 Fibonacci retracement level, or if you are more conservative, if you had put it around where I said you should put it as at the time I made that last analysis, you still would have made profit from this drop to the downside, right? So obviously you can see how price dropped. Now going into next week, what will I be expecting? I'll be expecting 2 things. I'll be expecting for price to reject, because now I've refined my Fibonacci retracement level from the recent swing high to the recent swing low. So I'll be expecting for price to reject the 0.6 fib level and then make its way back down into the 1.141.719 area. All right, and if price, let's say for whatever reason, fails to give us an entry at this zone, then I'll be waiting for price to come to the 0.786 level before we drop. All right, this is the 4-hour time frame, so you can pause this video and go plot these zones on your chart. You can also trade this on the lower time frame, like the 15 minutes, 30 minutes time frame, once you see price approaching this 4-hour level. So this is my view on USD JPY index going into next week. I am still bearish. Now the next on my list is DXY. My goodness, DXY is in a fix right now. Though if we look at the weekly time frame, we close with this massive engulfing candle, bullish engulfing candle, right? But if you look at last month closed with a massive bearish engulfing candle, and trust me, the higher time frame in most cases win. So I would have loved to see price drop into this zone once again before we go back up. You understand? Because we can see how strongly we closed for last month, for the month of November. So it only makes sense for price to drop into this zone before, even if we're going to go higher, before we continue higher. I'm speaking from my experience in this market. But, well, if we go to the lower time frame, it looks like price wants to just jump to the upside. I mean, if we go to the weekly time frame, you could see the massive rejection from the 0.6 fib level, and then you can now see that last week we closed with this massive bullish engulfing candle. So price may just continue higher. Even if we are going to continue lower, price may continue higher before we now fall to the downside. But if we continue higher, where do we come into? Now let's spot this on the daily time frame. Now on this daily time frame, guys, this is what I'm expecting. I'm actually expecting to see price push to the upside. I think CPI is going to validate that. CPI and FOMC is going to validate that. So I'd have loved to see a push up into 104.996 area on the DXY. Even if we're going to continue lower, it only makes sense for us to get this before we continue lower. All right, and of course, if we break above it, then we may just well continue blasting to the upside. All right, but I'm talking about this bearish move, like I said earlier, based on how I saw last month close. You can't ignore that massive bearish engulfing candle that played out last month. You can't ignore that. And again, if you look on this daily time frame, price is currently at a resistance zone. This zone has been used as a level of resistance and support historically. So if maybe going into next week I see a massive bearish engulfing candle, then I won't be expecting price to come into this zone anymore. I'll just be expecting for price to continue pushing to the downside. But if we can successfully close above this zone, then I would like to see price come into 104.996. All right, so thinking probabilities, if I see this, I'll do this, and if I see that, I'll do that. That is how I trade when I see that there's no clear direction in the market. But if we go to the 4-hour time frame again, there's another factor, another technical factor indicating that price may well break over the zone and make its way to the 104.996 that I mentioned earlier. I mean, you can see this inverse head and shoulders pattern on this 4-hour time frame here. Inverse head and shoulders pattern. So but it's not a valid inverse head and shoulders pattern until we break the neckline. All right, so this is the neckline. Let's consider this green zone as the neckline. So until we break above it, give it a retest, then guys, no doubt we are going to the upside. All right, because we must have created a new higher high, then the pullback will be a higher low for us to create another higher high coming into this zone. But if on the daily time frame, like I said, if we see a bearish engulfing candle, then guys, we are coming back down at least until we come into 102.152 area. So now that we've seen what is happening on the dollar index, let's look at the Euro USD. The Euro USD is also completely down. If you check the daily time frame, last week I had this to say on Euro USD around this zone and this zone. Let's check it out quickly. But if we continue lower, then I would like to see price come into the 1.07766 area or this green zone here, which is 1.07294 area. So as you can see, price came into that zone. But however, last week I predicted a buy. I actually even called a trade, which price had to stop me out twice before making it to my take profits. But it's all good. We can't catch them all. Counter trend trading is always tricky like that. You understand? Sometimes you catch it, sometimes you don't catch it. But it ended up being a good trade, just that it had to wick us out twice before flying to the upside. All right. And I was right about the trade the whole time. But like I said, price had to stop us twice before pushing higher. And as you can see, I made that trading decision because price was at a support level that has been used as an area of support and resistance previously. You can see here 1, 2, 3, 4, 5, right? So when price came there and when I went on the 4-hour time frame, I saw a bullish engulfing candlestick and I saw my strategy play out. So I switched to the lower time frame, which was the 15 minutes time frame, to catch a quick buying signal, which stopped us out twice before making it to our take profit, and then before making its way to this downside that I rightly predicted. And after coming into this downside, you can spot the massive rejection. So going into next week, guys, we could easily just push lower and continue lower. All right, which is the most likely thing to happen considering how we close for the week. Let's go back to the weekly time frame. So last week I called your attention to the fact that we have this bearish engulfing candle and price will continue lower last week. So you can see how price continued lower last week. Now let's go back to the daily time frame. So like I said, price may just break below here and continue lower, or we may see a pullback. We may see a pullback from here, at least into these areas here. You understand? That's how the market moves. The price will not just keep going in a straight line like this. At some point, it's going to pull back. All right. So we could come into here before we continue lower. And this zone is 1.08383. All right, so our price may most likely push up into that zone before we continue lower. But if we break above that zone, give it a retest, all right, then we are going to find our way all the way to the upside. So this is how I am looking at Euro USD on the daily time frame. But if we go to the 4-hour time frame, it looks like price is just going to respect this zone. All right, after creating this new lower low, guys, on Monday, if price fails to break back above this zone, and let's say I see a 4-hour bearish engulfing candlestick, then guys, I'll start looking for my strategy to play out so that I could take advantage of the trade and trade it until we come into 1.06937 area. So if I see a bearish engulfing candle here, I'll go to a much lower time frame. This is the 4-hour time frame, by the way. I'll go to a much lower time frame to take trades. So guys, let's check out the 15 minutes time frame. So on the 15 minutes time frame last week, we can see this was where price stopped us out about twice before making it to our take profit. And guys, when this thing happens, you can't control it. Once you have a strategy, like I've always advised, back test it, forward test it before taking it into a live market. All right, don't just guess your way around the market. So many traders guess their way around the market. They just come to the market every day, no strategy, no playbook, no rules of engagement. They just be like, okay, if I see this here, I'm going to do this. If I see that there, I'm going to. You need to have a rule of engagement in the market. You need to have a specific rule or set of rules of engagement in the market. All right, that is how you can remain consistently profitable over a long period of time. Let me show you something interesting on my stats. Right, let's go to the overview. I have placed, so far I have a 7-day history on this trade. Remember, my first trade on my prop firm account that I'm using to do the road to $1 million in funding I placed my first trade 2 Fridays ago, right? And 2 Fridays ago, you can see this is a 7 days trading history, Friday to Friday, right? And as you can see, I'm still up 2% after 5 trades, 2 losses, 3 wins. I won't even call it 3 wins. It's actually 2 wins. Why I said it's 2 wins is because I went full margin on the first 2 Let me even show you what I'm talking about. So you can see 3 wins, 3 wins, 2 losses. I'm talking about close trade. This one is in days, right? So I've had 3 days of winning streak and 1 losing day. But let's focus on this because this gives a more accurate reading. Close trades, 3 winning trades, 2 losing trades. Now, why I said it's not even up to 3 winning trades is because the first 2 trades were my normal 1% risk per trade, while the third trade was 0.4, or was it 0.3? Sorry, 0.3 risk on that trade. So, and the whole idea was because my setup wasn't 100%. So I wanted to risk very, very little so that even if I make it to my stop loss, I'll be losing very, very little, right? So it's just basically like 2 trades. I want to consider it 2 wins, because even the first win, I didn't hold. See, this was the first trade, so I didn't hold for 2 to 1. All right, because when I place my first trade on a prop firm account, I always like to take profit early so that I know that I have something to play with in the next trade. All right, so I want to come out as a winner so that I could have leverage on the next trade. So even if I hit stop loss, I'm still having my account balance intact. So that was why I closed earlier. All right, it's supposed to be a $120 close. I mean, it's a 6K account, risking 1% for 2%, so risking $60 for $120. So I closed earlier. Then on this other trade that I didn't risk much, it's kind of made up for that first trade because I closed that trade at $29, risking $25. So you can see it's technically 2 winning trades, 2 losing trades. So now after 2 winning trades and 2 losing trades, I have a 60% win rate and a 40% loss. You understand? And as you can see, my balance is still, my current balance is $137. All right, even after taking a loss. So this is how you convert the odds to your favor. The first 1 week, I have a 60% win rate. So imagine what will happen in the next consecutive weeks if I maintain a 60% win rate. That's a whole lot of money. All right, so I'm not going to come here and start feeding you lies and lies like I have 100% win rate. It's not possible. And all those other guys on YouTube that make you feel like, okay, you can take $100 to $1,000, and that is the shit you buy. If you're part of those people that buy that shit, then I'm sorry, this trading game is not for you. So enough of all these statistics. Let's go back to the analysis. So now for next week, like I said, I'll be expecting 2 things on Euro USD. If I see a bearish engulfing candle on the 4-hour time frame here, I'm going to the 15 minutes time frame to look for entry. All right, so that is how my day trading strategy works. I've not updated this on the course. So guys, if you're on the mentorship program, I'll be hosting a live session, on a special live session for you guys, where I'm going to be showing you this strategy. All right, it works like magic. All right, it's a 15 minutes, 30 minutes entry time frame. Then you use the 4-hour and the daily trend to like gauge your entry. All right, so watch out for that announcement. It's going to happen maybe on Sunday or maybe within the week, but definitely this next week. All right, so watch out for that announcement. So Euro USD for next week, I am more bearish than bullish. But if we close above here, let's say we see a daily candlestick close next week, this is a bearish candlestick. So let's say I see a daily candlestick close above this zone, then that will be my cue that price is coming into this zone. However, if I don't see a daily candlestick close above here, now that we're on the 4-hour, if I see a bearish 4-hour engulfing candlestick by Monday, let's say price is still below here, then that will be my cue that price is going to make its way down here before any form of pullback. So that is Euro USD in a nutshell. GBP USD. Let's start from the weekly time frame. GBP USD, look at this massive bearish engulfing candle. Now this goes to show that dollar index may most likely fly to the upside next week. I mean, look at how we close on GBP USD. Price is clearly in a downtrend after creating this new lower low lower high back into this pink zone that confluences with either the 0.5 or 0.6 fib level, but price chose the 0.6 fib level. Then we came into that 0.6 fib level. Look at the massive bearish weekly engulfing candle. Looks like price is going to continue lower, guys. I won't even lie to you. I won't even lie to you. However, if you watch last week's video, I had this to say about this green zone here. Should price continue lower? Now let's check it out. Pull back into where? Maybe around this zone. Let me just draw a zone here. This is the zone I'll be looking at on the daily time frame. So welcome back, guys. So as you can see, price played out exactly as I said. Came into that zone, saw a massive rejection, but well, look, considering how we closed for last week, I will be expecting price to like take out this zone. All right, my sell confirmation is going to come below this zone. Right, so if I see a retest like this, then my next target will be 1.23824 and 1.2338. all right, so this will be more like TP1 and TP2. You get the point. Should price continue lower, TP1, TP2. all right, but we need to take out this zone, because from this zone we may easily, because if you look at the overall trend on this daily time frame, after price gave us this double bottom, we started creating new highs, new higher low, new higher high, new higher low, new higher high. This could be a higher low for price to continue higher. It's a crazy month so far. It's been a crazy month so far. Last month was super bullish. This month is looking bearish. Looks like there's confusion everywhere, but as traders, we don't want to complicate things for ourselves. So if I see a massive daily candlestick close above this zone next week, then I'll be trading back into these areas here on the lower time frames, right? But if we break below this zone on the 4-hour time frame, this is the daily time frame, but if this plays out on the 4-hour time frame, a retest, then down is the way to go into next week. All right, let's check out the 4-hour time frame. So on the 4-hour time frame, massive double top, neckline taken out, price went back, retested that neckline, and now we are sitting on that daily zone. So like I said, selling confirmation will come below here. Then this will be take profit 1, and this will be take profit 2. all right, and let's say price continues higher, then if I see a massive daily bullish engulfing candle from this green zone, then guys, we are going to be trading to within these zones again. All right, but considering how we closed for last week, I'll be expecting a bearish candlestick. So even if we fail to take out this zone below, and let's say for the early part of next week price pushes up to the upside, I'll still be expecting for price to come back down to this zone, just to close something like it, to give us something like a bearish weekly candlestick, because of the size of last week's candle. All right, think about that. So that is my bias on GBP USD. GBP USD. I'm more bearish than bullish next week. Now the last on my list is gold. Gold was trading above this area in my last analysis, and you remember me predicting price from here? Do you remember I predicted this whole move from here, right? This is the video in case you're doubting me. Then I'll be waiting for price to drop into this demand zone below around here. All right, so that means I'll be expecting to see something like this before we continue higher. So welcome back, guys. So price actually played out perfectly, made its way all the way to the upside, and last week we're trading around here. I was particular about this area because of the monthly time frame. I was particular that price historically has rejected this zone twice, like 3 times in the past, and again we are trading back at that zone. We could easily continue higher, or we could see a massive rejection, but as you can see, price actually gave a massive rejection, almost giving us a massive bearish engulfing candlestick, right? But it's not an engulfing candlestick anyways, but you can tell that price is beginning to react to that zone. All right, go watch that last week's video to understand how I knew that there's a probability that price it was going to reject this zone. Right now, if we go to the daily time frame, you can see massive bearish engulfing candlestick on this particular day. We ranged, and then another massive bearish engulfing candlestick on Friday. Guys, next week on gold, I'm expecting price to come into the 1980 region. 1980 is where I'm expecting price to come to, 1980 areas. All right, so please watch out for that. If we go to the forward time frame, last week I also called your attention to the fact that if price rejects this zone, then the cue for me, the price is going to keep falling to the downside, is for price to take out this trend line. I said if we can close below this 4-hour trend line, then that's my cue that price is falling to the downside. So when I saw this happen, I knew that price is just going to pull back into this zone. All right, I knew that price was only just going to pull back into this zone and then continue lower. As you can see, price broke out of the trend line, created a new lower low here, went back to retest that zone, and this zone and this trend line, went back to retest it, then shot to the downside, went back, creating something like a double top before breaking lower. Now we have a new lower low, right? So going into next week, guys, I'll be expecting for price to like either reject this 2,800, this 2,000 region, right? Or let me say 2008, sorry, 2008.43 region before making its way into the 1980 area. All right, or we may see a manipulation to this top side here. Please bear that in mind. We may see a manipulation into 2017.11 because price sometimes can be crazy, can be very, very crazy, right? We could see a manipulation into here before we fall to the 1980.30 area. All right, so this is what I'm expecting to see on gold going into next week. So going into next week on gold, I am bearish. So guys, let's stop here for today. And if you made it to the end of this very lengthy video, I appreciate you guys. All right, and if you are yet to subscribe, please smash that subscribe button, like this video, and share it to your friends and family that trades. All right, and if you want to learn how to trade profitably, if you want to join us for our next live stream where I'll be sharing my exact strategy that makes me profit month in, month out, make sure you purchase our course or pay for any of our mentorship programs, and this strategy can be yours also. All right, the market is a big place. I mean, we trade prop firms, we're actually trading on a demo account. We don't really have much impact on the live market, right? So the concept of prop firm trading that I always preach is whatever profits you make, use it to fund your personal portfolio so that you can, because prop firm may not be here forever. All right, I'm talking about with this their particular, or let me say present business model. So you want to prepare yourself now for the rainy days. All right, so trade your prop firms, withdraw your profit, fund your personal accounts, and best believe you thank your future self for that. Once again, thanks for staying to the end of this video. If you are yet to subscribe, do so now, and I wish you a successful trading week, and I'm going to see you in the next week. Bye guys.